Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, March 28th at about 2 p.m. Eastern. Well, Wall Street looks set to extend a run of losses for world stocks, and safe haven gold notched another record high today. The final University of Michigan Index of Consumer Sentiment for March dropped to 57.0 from the preliminary reading of 57.9. Is that enough cheerful news for you today? If so, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $556.21. That's about 9% below its recent all-time closing high on February 19th at $612.93. So as we can see here, it's still trading. We're looking at the moving averages here. It's still trading below all of its moving averages. The red line, the 20-day, is coming in at 567.40. The green line, the 50-day moving average, is coming in at 588.41, and the 200-day moving average is overhead here, as you can see as well, at $574.37. So if we looked left on this chart a little bit, up back into the end of 2024, we know that in December that we had a relatively calm and prosperous little over a year that ended in December right here of 2024 when the SPY made an all-time closing high back here at $607.81. After that, it got very stormy. It hit a pothole here and fell in December down to $580.91. This was on just little bits of news here and there about the Fed rate, but it made an impact. Then the SPY rallied back up to the red line, the 20-day moving average, then fell back down to here, then rallied again, tried to get back up through the 50-day and 20-day, but couldn't keep going. Then finally fell down here to the January low at $575.35. Then the SPY rebounded and said, hey, everything's okay, came back up, moved back up through the 20-day, the 50-day, and but then it couldn't keep going anymore and fell back down, and so it started consolidating, as we say, or walking sideways along the 50-day moving average. And then again, rallied up to our current all-time closing high that we just spoke about at $619.23. And that was all she wrote for right now. Then it fell. It did a quick, not even a quick, it did quite a dumpster dive here all the way down to our recent March 13th low at $549.68. Then it rallied back up to the 200-day moving average and then slid lower, and that's up at $574 up here. It stayed above it, it closed right at it one day, stayed above it a day, and then fell back down to where we are today at $556.21. So we say, what in the world do we do with all this? We be careful, that's what we do. First of all, let's look at resistance here. We have potential resistance. We don't usually have it this low at the 20-day, but we do now. Potential resistance here at the 20-day moving average at $567.40. We can count in the October low here, if I can draw it straight enough. The October low came in at 568. So that's basically in the same place as the 20-day. We've also got the 200-day here at 574. So this whole area could be potential resistance. And then we have, if we keep on going here, then we have the January lows and that's going to come in right about where the 200-day is. So this is going to be tough duty for it to get over, I think. I don't know. Plenty of resistance there, again, up to the 50-day. And that's pretty high to count right now, and then finally up to 613 at the high. Most important thing right now for us to watch is the potential support here at 550. This is the March low that we just encountered a couple of weeks ago, and we definitely, especially after a downdraft like that, we definitely want it to hold here at the 550 level, and it's a level that I will be watching intently next week. Now, y'all, please know that pullbacks and, yes, corrections, and we're in correction territory, are common in the stock market. It can't go up forever. Buyers, profit taking comes in. Buyers need to sell sometimes, and stocks, companies get too overvalued. They get way overvalued, and that's where they were coming into December here, December of 2024. Into January, a lot of the big tech stocks especially were extremely overvalued. So people take profits, traders take profits. That's what happens. Markets move in cycles. They don't move straight up forever, and please, they don't move straight down forever. So it's natural here. It's never fun. I know that, but it's a natural way of things. So what we need to do is to protect our profits, protect our accounts, and then be ready to take advantage of it when things get better. So again, I'm going to be watching the support here at 550 into next week, see how it goes. And if it holds, we may have a tradable bottom form next week. And if it doesn't, I'm going to keep my powder dry. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the exchange traded fund that follows the NASDAQ 100, the top 100 non-financial stocks in the NASDAQ stock market. And that, of course, includes all the the large cap momentum stocks like NVIDIA, Meta, Apple, Tesla, Alphabet, that whole group. Now, when I captured this chart today, the QQQ was trading at $469.49. Right now, it is 12% below the all-time closing high in February at $539.52. Now, we know if we look left on the chart back to December, we know that since that December all-time closing high, and life was wonderful up until then, at 538, the Qs fell abruptly to the 50-day, down here, down to 509, then rallied, then fell back down again, then rallied again, fell down to the January low down here at 499.70. Let's make it 500 to make it easier. Then rallied up here to 533. We had an island reversal here, that's called. At 533, it gapped up and then, of course, gapped right back down again. Gapped down to 510. Then up and moved in a consolidation along the 50-day moving average, similarly to what the SPY did. Then climbed to the new all-time closing high on February 19th at $539.52. And then, like the SPY, did a dumpster dive all the way down into March. Our March low here on March 13th was $466. Then it climbed up through the 200-day moving average, and look how this acted as resistance. Tough dude here, and it's moving up. Usually it's tougher when it's moving down, but anyway, it's slanting up, the 200-day moving average, which is somewhat positive. But so it rallied up to the 200-day moving average at about 494, then fell where we are again today now at $469.49. So we say, what do we do with this one? Now, looking forward, where's the potential resistance? Well, we've got a little bit here with the red line, the 20-day moving average coming in at 483. We know that the October low also came in at 483. So we've got the 20-day and the October low. I'm not drawing that very well, right? Coming in at the same place. So that's That could be some extra strength there. Also up at the 200-day moving average at 494. We've got the January low at 500 here. Basically there's resistance, potential resistance all the way up here. We've got the 50-day at 507, and then of course all the way up here to 539. It's going to be it's going to have a lot of strength to get up through all that, but it's possible for sure. We do have here potential price support at 466 right here. It's at 469 and change now. This 466 line I am going to be glued to in the coming week. I know a lot of us want to get back into tech stocks, but I'm not going there unless this low holds right here. This has got to hold. We do have September lows you can't see on the screen here, but they come in at 448. So the September lows are about right down here, and that's one more potential support that we can keep up, that we can watch. So again, the question is, does it hold here at 466? If it does, if it consolidates sideways next week and looks like some buyers are coming in with the right amount of volume, with good strong volume, then that will be a bullish thing. If it can't, if it keeps going lower, then fine. Step aside and wait till it starts up again. So everybody be careful out there, please. And if you do get in, please use hard stops. Now, please don't feel as though you have to buy something. I know traders tend to do that. I know, because I used to feel that way. But at any rate, one of the most defensive places to be in, as you probably know, in a down market is the utilities sector. Utilities select sector, Spider Fund, the XLU. We're looking at a daily chart of that right now. It's the ETF for utilities, 31 holdings. Including NextEra Energy, Southern Company, Duke Energy, Constellation Energy, and Dominion Energy. Now, when I captured this chart today, the XLU was trading at $78.06. As you can see, it's sitting above its 200-day moving average, which is coming in at $76.69. The 20-day moving average is coming in actually just a couple of cents, $77.98, just a modicum below the actual price, just a few cents. And we've got the 50-day here at $78.49, and they're all going sideways, which is pretty good. And again, yes, this is a defensive play if it's something you want to keep in mind. Now, if we look left on this chart, we can see that the XLU actually, it did very well last year, and it made an all-time high on November 24th at $83.41. Then it fell down here to a December low down here at 74. Then it rallied back up to 70, back up to the 20-day here at 77. Then it retested that prior low down here and right at the 200-day moving average at 74. Then it rallied up to 80, then back down to the 20-day moving average, then rallied back up and retested. XLU likes to test and retest, so it tested that little high there again, back up at 80, then fell down to the 200-day moving average at 76. But this is good because, like the 200-day moving average, the buyers came in at a slightly higher low, so they bought sooner than a retest all the way down. So then the XLU came up to this point, rallied back up, climbed back over its 50 and 20-day MA, but then fell back down in the last week, but is moving up today. Many times utilities will move at least slightly higher when the rest of the market's moving lower. Because, again, people jump into defensive moves. So we've got this trend line coming up here. Basically, the 200-day is drawing it for us. We can do this, too. We can see there is a slight triangle being drawn here. So this is the trend line overhead. So in the coming week, if the XLU can stay above its 200-day moving average, and that, again, is coming in at $76.69. If the XLU can stay above that, I may buy a position of this ETF in my trading portfolio with a stop below the 200-day moving average. I'm going to put it down here at $75.25. We have this little low here, pivot low at 76, and so I'll just make it a little bit lower than that and give it that much room, but I'm not willing to lose much money in any trade next week. If and when the XLU can move higher and if it can close above the 80 line, I will add to my position, and by then my stop will be a trailing stop. So you may want to keep an eye on the XLU in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless trading programs. How to trade the trend to profits, right here. How to trade the trend to profits is the perfect training program to help you enter, manage, and take maximum gains from long-term trades. You will trade with confidence because you will understand how to buy low and sell high using my unique strategy for long-term trading. Also known as trend trading, core trading, and position trading. When you use my techniques, this is one of the easiest ways to bring home consistent profits from the market. And what we're doing now, guys, is we're waiting for the market to make a low here, whether that takes a week or 2 weeks, whatever it takes, and then knowing how to trade the trend to profits gets you in, and you'll know how to get in at the lowest point, but the best point for the trade you want to make, and again, ride it up to an uptrend. A lot of these stocks that have been overvalued and oversold and that are ripe for going higher in the future. That's where you want to get in and use the techniques I teach you in this so that you can make long-term profits, and they're always the best ones. Our new low price for this program is only $127, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. I love Metastock real-time charts. And once you purchase, you have unlimited access to learn at your own pace. So from our ever-popular 7 Steps to Successful Trading and How to Swing Trade Successfully, we just talked about Trade the Trend to Profits, How to Read Charts, great for novices, 3 Winning Setups, great for short-term traders, and Bottom Fish Like a Pro, another really good one to have right now. Find out how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or simply still just click on the orange button below. So until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.